Okay, hi everybody. I am Cindy with Alpha Omega Accounting, and Jake is joining us with the Liftoff team to talk about all of the stuff that's going on with investing. And my son Scott is also on, and he is going to be monitoring the chat. So you have a couple of options. You can either leave yourself unmuted and go ahead and ask questions that way, or you can put questions into the chat and Scott will let us know if you've got something that we need to answer. So let's get started. Investing. Right now, this is quite a topic because everybody is sort of expecting not to have their house next week. So we need to make sure that we've got all of that stuff taken care of. So we're going to start going through this. Okay, I already introduced myself. And Jake, why don't you go ahead and introduce yourself real quick?
Sure. Yeah. Hi, guys. Thank you so much, Cindy, for having me on. I'm Jake Martin. I'm a mortgage loan officer. I've been in the business for over 6 years. And what's great about our company is we're kind of a mix, a hybrid between a broker and a correspondent lender directly to Fannie and Freddie. So right now, the whole broker world is shooken up. And so Fannie and Freddie are really the only way to go for loans today. So I'll be talking about that more today. But feel free to ask me any questions regarding mortgages or anything at all. I can't get enough of reading articles right now, which is crazy. So yeah, thanks again, Cindy. Appreciate you guys.
Cool. Okay, so the first question is, should you be investing right now? Of course. If you have the money, go for it. The thing is that right now, cash buyers are being sought out to purchase homes and commercial property. The reason for that is because, as Jake mentioned, they are only doing very limited loans right now. And so there is also some real problems with even buying with cash that you have to watch out for. First off, verifying whether or not they have an outstanding loan, and deeds of ownership is extremely difficult, if not impossible right now. So be really cautious that you know who you are dealing with if you are doing a cash buy. The banks have suspended underwriting mortgages because they're overwhelmed with the PPP loans and the EID loans. Andy, who is on the call with us, his company is actually doing these PPP loans. So if you if your bank is not doing them, or if like Wells Fargo has run out of funds and they are not taking any new applications and stuff, then give me a call and I'll give you Andy's information. So what about properties that you already own? Okay, most property owners are having trouble collecting rent from tenants. Mostly because their tenants are out of work, and everything is so up in the air, and the stimulus checks have not started coming through yet, although they are supposed to in the next day or two. So we'll see if that happens. Although I have to admit, $1,200, that's not going to cover very many people's rents or mortgages. So be careful with that. Now, banks are still expecting you to do mortgage payments. Yeah, and but fortunately, the evictions and foreclosures have been suspended by the federal government. So you can't be evicted or foreclosed on. However, if you aren't making your payments, then they can also, as soon as that is lifted, then they can start the foreclosure proceedings immediately. So be cautious with that. Now, I have been asked a lot about these SBA loans that are coming out. There are 2 economic stimulus loans that came out last week. The EIDL loan is the Economic Injury Disaster Loan, and the PPP loan is the Payroll Protection Plan. Most investors will only qualify for the EIDL loan, but you also have to have, if you have other businesses such as a property management company, then you could qualify for the PPP loan. So, and keep in mind that this is per EIN number. So if you have property management company that qualifies for the PPP loan, you can do that with them. But if you also have a LLC that does just holds property and does rentals, then you could qualify for the EIDL loan under those ones. Basically, the PPP loan is a extension of SBA 7 program loans. Any small business can apply for it up to 2.5 average of your monthly payroll costs up to 10 million. And with you happen to have under 500 employees, reaching that 10 million mark with only 500 employees seems like a stretch, but there's a lot of them that are going for that for the full 10 million, which is what has got all of these ones like Wells Fargo have already outstripped what they are allowed to do. Okay, it must be used for payroll, mortgage interest, rent, or utilities only. It's a non-recourse loan with no personal guarantee on it, and the interest rate is capped at 4%. These are the loans that Andy's doing if you need a resource for that. The repayment terms are up to 10 years. The payments can be deferred for 1 year. So if you get your loan today, you won't have to start paying it until April of 2021. Some or all of the loan can be forgiven tax-free if the proceeds are used for qualifying expenditures, meaning payroll, utilities, mortgage interest only, not the principal. But it has to be used during the 8 weeks following the loan funding date. So if you get your loan in today, you only have 8 weeks to pay all of it out in order to get this loan forgiveness. So if you're trying to do this so that you can pay everybody for the next 3 months or however long that we're gonna be in this, keep in mind you have to do this you only have 8 weeks to get everything out. So you could end up doing actually bonuses and stuff to get that payroll up. If the business has cut back on payroll after 4/15, you have limited forgiveness until your workforce levels or gross payroll are restored. They have to be restored by June 30th in order to get the full forgiveness. And so basically, if a lot of these restaurants and stuff that have people out completely, they can use this to bring people back on. But ones like the let's say a gym or yoga studios and stuff like that that are closed completely, if you are completely closed, you are not eligible for the PPP loan because this is only for the protection of the payroll. The economic injury disaster loan, this is also an enhancement to existing loans that are out there. You can get up to 2 million on this one, depending on the damages and your ability to repay. The PPP loan doesn't have that ability to repay loan on it, but I think they're probably going to add it. Your interest is capped at 4%. This one is repayment terms are up to 30 years instead of 10. Loans that are less than 200K do not have to have a personal guarantee. So if you're over the 200,000, then you have to have a personal guarantee by the owners. If you're under that, you don't. Applicants are eligible to receive an advance of up to 10K with no repayment requirement. So, but the thing is that you cannot take both the PPP loan and the EID loan. And so some people are saying that, well, if I can only go, if my payroll is under the 10K, then I might as well go for the EID loan instead. I have a lot of people that are applying for both, and just whichever one comes in first is the one they're going to do, and they'll just reject the other one. And so it really is up in the air right now. They did come out with a new regulation last night that it actually said these are the intermediary final rules for these loans. Now, what that means, we have no idea. Are they actual final, or are they intermediate, regulations on this? We don't know. So basically, they can still change it. Okay. Now, then this one can be used for any business expense. It does not have to be payroll and all those. This one can also be used for expanding your business and getting new equipment and stuff, and it can be used for protecting your supply chain or getting in or increasing your capacity for your business. This is a comparison between the two, and yes, I've got it right this time. Last time I had these switched. Okay, so the maximum amount is 10 million or 2.5 of your average payroll, or 10 million or 2.5. We already went through some of those. So if you have any questions, let me know. In order to be eligible, and Andy actually has some of these new regulations because this one changed a little bit. For the PPP loan, you have to have a business. That's pretty universal. You can be a nonprofit. Okay, so some of the churches and stuff that are struggling because they contributions and tithes are down may be able to do PPP loans too. You can be a self-employed individual, an independent contractor. Any of those can do this, but you still have to have under 500 employees with a few exceptions. So one of those exceptions is like if you own, say, a hotel, you have like 5 hotels. As long as you have under 5 per location, you can apply for it for everybody, for all of them together. But if one of those has over 500, then that one is not eligible for that. That same thing is holding for affiliation businesses and franchises. The EID eligibility, these are businesses or nonprofits with under 500 employees. Again, they still have that thing on there that you can do it for certain industries. This is for sole proprietors with or without employees and independent contractors. So there's a little bit of difference between the eligibility for these are not very different between them. It's what you can use them on that is the difference. There's some restrictions on the EIDL loans. The first 200K is supposed to be processed within the first 3 days of applying. This is not holding true at all. So far, I have not seen anybody have one of these go through yet. And so now they're saying that it's 3 days after your application is approved. Okay, so it's not, they're trying to give themselves some leeway of how fast they can get these out. This portion does not have to be repaid. The 10K doesn't have to be repaid as long as it's used for sick leave for employees, payroll during the business disruption, increasing your supply demand, which you can't use that PPP loan for. Rents or mortgage payments, again, you cannot use that other than interest on the PPP loan, and repaying other debts. So if you have any kind of debt outstanding, you can use it for this one, where you can't use it on the other one. So be careful which loan you actually apply for. And if you apply for both, be really careful which one you accept, because it'll depend on how much of this is forgiven based on what you use it for. There are other loans available from the SBA. The 7A plan usually goes up to $5 million for expansion. The Community Advantage program is only for underserved markets. Now, most of those are minorities and women, but that can also be rural areas. And so since we're in a rural area, considered by federal that we are rural, even though we've got hundreds and thousands of people up here. So it is possible to get one of those. I'm going to warn you though, a lot of these, they're not processing them right now. So even if you try to go for one of the different loans that are out there, a lot of them, they are so overwhelmed between the PPP loans and the EIDL loans that they are not processing anything. The 504 land loan is for acquisition of fixed assets only. So if you're trying to buy a building or equipment, that would work. Microloans are done through nonprofit lending organizations. Again, it's for only underserved markets. This one is a maximum of 50K. The average loan on these are 14K. Some states have their own relief programs. I know that Fort Collins has a special loan program out right now. Denver has one. Those are the only two I know of for sure in Colorado. But I put in the link for all the state agencies so you can see if there's one in your area. Jake, take it away.
All right. That was so great information, Cindy. Thank you so much for sharing. And do you mind if I share my screen here then?
Oh yeah, go ahead. I will stop sharing mine and then you can share yours. There's a green button down at the bottom.
Perfect. Thank you so much. Okay. Share this one. Okay. Can everyone see that okay?
Yes, but right now we are seeing your, there we go. Now it's the slide.
Okay, perfect.
Okay.
All right.
Yeah, I have to
thank
be
you.
careful with that. Okay.
I know, right? All right, yes. So Matt and I were both part of the Liftoff team here. We're both loan officers and we decided to combine our business together. Just because as a mortgage loan officer, you have to wear so many different hats. And so we found out that actually worked really well. So we've been in business for a couple years now. And that is my dog. So we're using her right now in marketing. So she's adorable. But anyway, I kind of want to teach you guys or kind of show you guys, I don't know exactly where everyone's at right now in their current lives. So I'll kind of show you what rates you're looking at. I just pulled these rates like less than an hour ago. And then these current are primary rates. And then also I want to talk about the investor side as well too. So right now, it is a little crazy in the mortgage industry, but it is a perfect opportunity to act. I believe right now we're pricing the best rates that it's a good chance that we won't see for a very long time. So I'm just going to throw this kind of example at you. So what you're looking at today is a primary resident, and if you don't want to take any cash out, as long as or I guess it's not over $2,000, you can receive the max $2,000 at closing for a rate and term refinance. So right now, this is based off of an example of someone who has excellent credit, which is 740 or above FICO score. And this is at a $300,000 loan amount at a $400,000 value. So they're at roughly a 75% loan to value. So right now, I highlighted what's called the par rate. So like when you're golfing or whatnot, if you're par 3, well, if you get 3, if you get the ball in the hole, when you have 3 strikes or 3 swings, I should say, then that's equal. So right now, roughly, if you see like the column where it says price and you go down, that's 100. You might have to hide your faces there. So 100 would mean that is the par rate for today. So, I'm sorry, oops, I just clicked forward. Okay, so this rate today would be 3.25%, and then the far right is a principal and interest payment off this rate. So you're looking at 1306. So I mean, an interest rate 3.25% is phenomenal. I personally, I've been in mortgage business for about 6+ years. I've never seen it this low before. So right now, since appraisals are good, everything is good. It is such a great time to act. And I'm going to show what it looks like to take cash out as well. So I've never seen cash out refinances at such a low interest rate either. So this is the very similar scenario, but let's just say you only owe $200,000 on this loan. So now you're getting $100,000 cash out. Your total loan amount is $300,000. Look at the interest rate. It just bumped up 1/8 more than it was before. So, and I'll kind of tell you a little bit later on about, I'll show you what it means to calculate the interest rates. So mortgage rates are not like auto loan rates where you go for you go to the bank, you apply for an auto loan and they're like, okay, well, here's your rate. Mortgage rates are not like that. And I'll show you the whole spread and kind of go more into detail about that, because I know we have a lot of investors here. But overall, what I'm trying to go on, trying to share with you guys today is, first, if you don't have any debt, that's great. But if your mortgage loan is, at all higher than a 3.25% right now, if you know anybody, they're still working and whatnot, we're still doing the loans. And so right now is such a great time to refinance that. And then also, I mean, if anybody has any debt whatsoever that's over the 3.25% interest rate, it's a great time to roll it into the mortgage. And then I've had some people tell me before, well, I don't want to roll my auto loan in there because then I have to pay it out over the whole 30 years. Well, that's not true, because what you can do is roll it into this and then keep making that same payment that you were for your auto loan into your mortgage as a principal only payment. And then you're going to shave off that much time on your loan as well. But what you've just done is take that maybe 6% interest rate on your auto loan and roll it into a 3.25 or 3.375% interest rate. So it's great. A lot of people also ask me about, what does a 15-year look like? I can show that to you if you guys want me to. I'd be happy to. But why I don't usually recommend it for people is, for example, your payment goes so much higher. So if you do face some tough times or whatnot, you're required to make that 15-year payment. So what I suggest my clients to do instead is get the 30-year fixed. The interest rate's a tad bit higher, usually about 0.5% higher, but make that same payment that you were for the 15-year for the 30-year, and then you'll pay it off in 15 years. If you are having issues making that payment in 1 month and things get tough, well, then you can go back to that 30-year payment and you're not going to have a late reporting in your credit. So that is just a fantastic way a lot of clients have helped. Some people are wondering, with all this fear that's going on in this market, they're like, oh man, I think I'm just going to wait. I'm going to wait this out. There is some issues with waiting. Like the first one there is like, I mean, yeah, you might have steady income right now, but who knows what can happen in the future. We are facing an unknown market, but we should look at what we do know today. And right now, your home value, we know what your home value is today. We know what the current rates are today. We know that hopefully you do have a job or you have some kind of income today. So we can move forward and get you these rates. But in the future, what if home values do start to drop? Then appraisals are going to start to drop, and it's going to be kind of a free fall, unfortunately, if that happens. Interest rates right now, what has saved the mortgage industry is really the Federal Reserve stepping in there and saving these mortgage rates. And so we are thankful to have this time that we have with these low interest rates so we can help a lot of people. So really, right now, it's just a fantastic time, and we've helped a lot of people in this situation refinance. I have had some people reach out to me too and ask about, making my mortgage payments, or even like renters asking about that, whatnot. It's like people need to realize they need to just make their payment if they can. If they can't, then that's a different situation. But there, I think a lot of people have this idea of like, oh, I'm afraid, maybe I can get out of making my payment because I don't want to, or something like that. And that is just it's not good for the economy. It's not good for the system. It's not good for anything. And I try to read as much as I can about this subject. It seems like every single lender right now has a little bit different way of them doing it. And some of them are just terrible, where they're having a balloon payment at the end of like 3 months, where they have to pay all the 3 months of payments back. And so that's not going to help anybody. So make sure, if you know someone that is having an issue, go ahead, and I know it's going to be a very long wait on the phone, but call their service lender just so they fully know their options and they know what they're getting into. Because I've read some articles where people are like, oh, wait, I have to pay my mortgage back? Like, I have to pay these payments? And it's just, yes. The best one I've heard so far is that they'll add, let's say if you need to skip your monthly payment for 3 months, they'll add 3 months to the back of the loan. This next slide here is what is called the Mortgage Coach. It's a software that we pay for. And what it does is that it shows people their different options of what makes sense. Right now, I created a an estimate of what it makes sense to purchase a home right now with 5% down, because for so long we were kind of used to these different interest rates that were before in the 4s or 5s or whatnot. But now, I mean, with a 3.25%, I mean, it's pretty amazing. I mean, this is the Colorado market that we're roughly going off of, but with 5% down, I mean, those monthly payments are unheard of that I've seen. So, from the far left column is 350,000 all the way up to 425. So if you would like to see any estimates at all, I don't need to pull credit or anything like that. I can just quickly put these together for you and get them out, and you can see your options as well. Actually, before I go to questions here, I'm going to kind of share with you kind of some insider secrets of the mortgage industry. So this is called Optimal Blue. What this is that it's pricing. This is like where we get our pricing from. So right now, I'm going to show you guys loan amount $300,000, $400,000 estimate of how much it costs or what the appraisal is. We're going to show what a rate and term looks like for an investment property. So I put all the numbers in there. We're going to go conforming. See what we get here. Okay, so right now, so we can't choose, let's see here. This one is what I'm going to choose. This one's Freddie Mac. So right now they're having the best prices right now. So again, this is an investment property, which is pretty amazing. So right now we do have to lock all loans for 60 days, no matter what our company policy is. So this is like the whole spread of rates that I'm sharing with you today. I wonder if you've ever been to a loan officer before, you should always ask to see what the spread is. Anyway, so this is what the current par rate would be, as close to as 100 as possible. So even anything over 100, you should be getting some money back as a lender credit. Here, it won't be very much because it's 0.025%. But so right now, the par rate for this loan would be 4.125%, with the principal and interest payment being $1,454. And so you can see roughly what this will cost, and I'll kind of show you an example here. I've got some calculators set up here. So what I did was I took the par rate of 4.125, and so right now that's at the par, and then let's see here, I subtracted that from the 3.25. So we're looking at a pricing from 100 to roughly about 98.1. So if we do that, let me pop up that calculator. We're going to get, let's see here. Sorry, bear with me here. I had it all set up and now I have like so many calculators on my screen. Yeah, I'll just do it again here. Okay, so 100.025 minus 98.1. So you're looking at roughly a 1.925% that's going to cost. So what does that mean? So we're going to divide that by 100. So we're looking at 0.01925. I'm going to times that by the loan amount, which is $300,000. So it's going to cost you roughly about $5,775 for this rate to buy it down. And so what you would look at then is, okay, well, what's the break-even point? Should I buy it down? That seems like a lot of money. So what I did is I had it up here. Okay. So I took then the monthly payments of $1,454 minus the $1,306 would be the new monthly payment, and that'd be $148. So you divide that by $148 that you're saving per month. That's about 39 months. You're looking at roughly a 3-year, just over 3.25 years break-even point. So like, does it make sense to buy it on rates? And honestly, right now in the current market we're in, yes, it does. I mean, as long as you plan to own this property for more than 3.25% of the years, then it just makes sense to buy it down, because then every month after that, you're just saving money, just saving $148 a month. So there's that. And I was going to show you what it would look like for like a cash out for investment property. So as it gets riskier for investment property, for example, that's a risk class. And then now cash out would be another risk class as well. So let's just look at $100,000 cash out investment property. Okay. So right now the par rate today would be about 4.875 to take out $100,000 cash out. And of course, this is all on excellent credit and whatnot. So I can show you the spread as well for that. And the lowest we can go is roughly 97.5 roughly. So we can't go any lower than that. But that's pretty much all I have today, but I'd love to answer any questions you have. So please don't hold them back. Let me know what I can do for you. Or Cindy, I'll maybe give it back to you.
Okay. Does anyone have any questions? You need to stop sharing your screen up at the top.
Yeah, I'm trying to get back to the controls. Here we go. Okay, stop share. Perfect.
Okay, so does anyone have any questions? And Andy, do you want to jump in here and tell us how these PPP loans are going to work? Your mic's not on.
Hi, I'm Andy. I wish I could tell you how it's going to work, but we're still in the process of putting it all together and rolling it out. So we haven't officially rolled out yet.
Okay.
So basically, you covered all the highlights. I know that they increased, or they're submitting for an increase today. I saw that come across my desk for another $250 billion under the PPP allowance. It was approved for what, 360 billion, I think, 365 billion. As of last Friday, when day one of the rollout, they had completed 17,000 loans for 5.5 billion. That's with approximately 10 to 25% of originators even on board yet. I mean, at the current run rate, on Friday, with hardly anybody rolling out, we're at, a 10-day run rate to consume 360 billion. So interestingly enough, today, they came out with another $250 billion approval. It'll probably be another approval after that. Who knows? It's crazy. But I don't have any information other than what you shared. Pretty basic. It's pretty simple, straightforward, minimal documentation. You have to prove that you were in business by February 15th and provide your payroll history for 2019. And that's pretty much it. I have a question for you, though. Do you know anybody who's actually received funds on the EIDL loan?
No, I don't.
Okay.
Every board that I've talked to, that I'm on, there is so far none of the EIDL loans have been approved yet. And those are supposed to be going directly through the SBA and not through the banks. So I think they're going to have to bring the banks into these too, because they don't have the capacity to be doing this.
I can't even imagine what they're dealing with on their end right now. But yeah, so it's a cluster pretty much. I mean, but hey, it's a good faith effort to help. But it's gonna, I mean, that's monumental. To roll something out like that is absolutely monumental beyond comprehension in a 1 week period. It's huge.
Yeah.
So we'll see what happens. I keep telling our team, we may be out of money before we roll it out. I mean, there's a lot of, we're funding it, so it's, there's a lot at work. We're setting up, in basically a 4-day period, we're setting up the servicing, the underwriting, everything in this entire program. So we'll see. We'll see how it all rolls out. But I mean, It's going to be interesting. I'll just leave it at that.
Yeah. It's
Fun time.
really interesting.
I have a question for Jake. Do you have any, do you see any liquidity challenges yet creeping up with any of the lenders, wholesale lenders that you're working with? Are you seeing, I know there's some pressure on government loans right now. I just don't know if you're seeing any other liquidity drying up issues.
That's a great question. So right now, the non-QM market, which is basically the jumbo market, you know, you know, a lot of them like basically shut down. They're not taking any new business. We still do have a few non-QM. Right now, we're doing a save a loan right now, and it's a $2 million house where they basically they're going to go with a lender, and yeah, I'm pre-approved all of the stuff, and all of a sudden they just said no, we're not doing this anymore. So right now we're working with an investor that is looking to do their loan, so we're in the process of doing that. But it's anything on the jumbo side is really tough, and then also the broker products out there, you know, where we were able to like broker it to different investors and whatnot. They basically shut up their rates so much that it's not even worth even checking with them anymore. So right now, Fannie and Freddie are like the only way to go for like being liquid and having great rates. But if the Fed stops buying mortgage-backed securities, I think we're going to have a big issue there too. So.
Yeah, I would suggest anybody trying to get money right now, get it as fast as you possibly can, because there's a liquidity crisis. And the contagion, it's in the commercial mortgage-backed security market, private lending market, non-QM. I'm impacted. I'm the national sales manager for a Blackstone Group company called Finance of America. We were funding $150 million a month up until about 15 days ago, and we've seized all funding. We don't have any liquidity in the secondary market right now. We've paused everything, and we're right-sizing right now for the entire comeback of the new economy, but there's literally no money in the secondary market right now. And it's interesting that we see now the contagion coming over to the government market, and you know, potentially at risk the conventional market. So if you need money, boy, you better go quickly. I'm not trying to spread fear. I'm just being real. There's a lot of uncertainty still, and the secondary market is not even close to being stabilized.
Cindy, I had a question for Andy. I don't know if I misunderstood, but Andy, did you say there's another 250 billion for small businesses coming up on top of the 350 billion approved by the government? And also, I missed the second part of the question: how much has been given out to date?
Okay, so to date, the average loan size is $320,000 per loan. I think I heard yesterday, on Friday, there was 17,000 loans made by Monday, I should say, by Monday morning. I heard that there was approximately 35,000 loans were made. Approximate average is 323,000 per loan, so that you can do the math on that. And yes, indeed, you know, so I mean, I don't know where it's at. You know, all I know is we were at a run rate. You know, if it's a $10 billion a day type, we were at $5 billion with 10 to 25% of lending capacity out there, right? So if it's 100% lending capacity, right, then you're at $20 billion a day. Well, that's, you know, that's a matter of 15 days, and all that money is gone. So if you need that money, boy, you better get in line with someone that's doing that money right now. Now they did, let me pull it up here. They did approve, I think it's approved. I just saw it. I just got a memo on it here. All right, here. They're seeking another $250 billion to bolster the PPP program. That just came out in the Trump Muchin. It just came out, I don't know, 1 hour ago, that they just announced that they're seeking another 250 billion. So that'll put it at roughly 600 billion. But my guess is they'll probably seek out another one after this because, I mean, it's going so fast and so furious. So we're getting in the game. We're going to do it. We're jumping through all the hoops and setting everything up, process, underwriting, everything, servicing lines, all of that. And we hope to roll it out this week because we do anticipate that it's going to, you know, this is PE3, PE4, PE5, you know, just like QE, they'll just keep printing money and giving it out until we get through this. That's my guess.
Okay, Andy, thank you. And Cindy, I think you mentioned you're gonna give us the information from Andy later on, right?
Yeah, if you want Andy's contact information, just drop me an email and I will get you his contact information.
Yep.
Okay, thank you.
As soon as I can help, I sure will.
Yeah, and Jake is also doing loans. He's just not doing them in the PPP market. He's doing them in the commercial and real and residential real estate. So if that's what you're looking for too, you need to contact Jake.
Thanks again.
Okay. Does anyone have any other questions before we stop for the day?
Nope.
Okay, I don't see
Me
any
neither.
other questions. I do want to let you know that if you watch my blog, I've got some stuff coming up on there. And so if things change or if there's a, then I'll let you know there if they change the regulations or anything like that. You can also follow me or Jake or Andy on Facebook because I know all of us are putting stuff out there as fast as we can. And then we're hoping to do another series of classes probably next week on stuff like how to work from home with your children. I've been doing that I did that from the beginning. So
You're an expert.
when I started this business. So if you're interested in those, let me know.
Right.
Thank you everyone for joining us.
Thank you all.
Thank you.
Bye.